Yes, under Great Day Smart Investors, whenever you are watching me live, it's your most trusted and reliable property provider in the built environment, Ayeni and Godwin. I'm here before you this precious morning to discuss risk in real estate. Our topic before this morning is understanding the risk in real estate investment. So this topic is credited to one of my mentors. So I'll just go further to give you some of the risk before we discuss what they entail. First of all, going to look at the type of risk in real estate investment. So we have so many of them. Just be listing some few as regards to this topic. One of it is location risk, finance risk, which is leverage risk. We also have the liquidity risk. Then inflation risk is also part of it. The management risk. We have the interest rate risk, the legislative risk, development risk. We also have the entitlement risk, legal risk is part of it, operational risk, structural risk. While the very last one appertain to this topic is negative cash flow. So before we venture into all these type of risks in real estate, let's look at what real estate means. Real estate has been defined as a property that consists of the land and the improvement upon it. It also includes the building fixtures, the roads, the structures, and the utility. While risk, on the other hand, lies the features uncertainty about the deviation from expected end or expected outcome. So basically speaking, we can say risk in real estate refers to something bad. So for you to understand and mitigate against this risk, you have to understand location risk. In here are prone to natural disasters such as flood, landslide. This risk in real estate hamper physical damage and reduce the value of the land. Leverage risk refers to how much debt you take to fund investment. Oftentimes, it is calculated in terms of debt equity ratio. Leverage risk, also known as structural risk, which has nothing to do with the structure, only has to do with the deal involved in the structure. Is the liquidity risk. This is the inability to sell property quickly at or close to its fair market value. This forces an individual to accept a significant discount in cash since money is urgently needed. Next one is inflation risk. Before doing any real estate transaction, you must do a due diligence on the current inflation risk involved in the economy. This Nigerian economy rises from 18% to 32%. Before you venture into real estate investment, you have to understand the inflation of the economy. Just like we have presently, all transactions changes between 100% to 200%. So you have to do a properly due diligence before you venture into landed transactions. We also have the management risk. So in this case, the amount of income a property can generate depends on the competency it is managed. Type of risk in real estate is based on the ability the management is able to respond to economic situation quickly. One is interest rate risk. Investors using debt financing may face higher interest rates upon refinancing. It's always advisable for an investor to ask of interest rate before involving in it. There's also the legislative risk. This is another major risk that is involved in real estate. Federal, state, and local government legislate real estate with several laws to regulate the industry. For instance, increases in property tax can lower your profit margin and hurt your cash flow. There's also changes in law. Changes in law can adversely affect or impact your property rent control. There's also building permit fee, acquisition issue, and bureaucracy. Next one is development risk. When the property requires significant development or redevelopment, there are development associated with it. This may come in forms of construction and entitlement risk. This refers to potential lawsuit liability claim that may arise during the ownership or management of real estate investment. To manage this risk, it's advisable and essential to work with knowledgeable real estate attorney. Operational risk. This refers to potential for problems that may arise during the management of real estate investments, such as maintenance issues, tenant disputes. So the next is structural risk. Not every potential investment is flawless. Lastly is the negative cash flow risk. Cash flow risk in real estate investment refers to the money that is left over after covering expenses, tax, insurance, and mortgage payments. Negative cash flow happens when the money coming in is less than the money going out. It has to do with negative cash flow risk. So this comes to the conclusion of today's topic. In our next topic, I will be discussing ways to minimize this risk in real estate. So I hope you find this topic interesting. My number will be displayed on the screen for you to put a call if there's anything you needed to ask about what I've just discussed, risk in real estate investment. So you can do well to also drop a message through the number. You can send me a DM through the number displayed on the screen. Anything pertaining to real estate, you can just ask me. I'm available to give you that proper guidelines and process to take before you can venture into real estate investment. Thank you very much. Do have a perfect day ahead. Bye for now.